Okay, what is up, people? Welcome back to another stream. Hope everyone is doing good this morning. As always, guys, if you are enjoying the streams, the content on the channel, please be sure to like and subscribe. It really does help out. And also, of course, make sure you do hit the bell so you don't miss out on any streams or uploads in the future. But welcome back to another stream, guys. Hope everyone is well. Liam, good morning. We locked in my GI past my 100k channel. Nice, well done. Can we look at NAS, SPX, Pound USD? I'm currently on my second buy of 200k challenge. We'll start this week. Well done. Which firm you did the 100k challenge with? I'm interested to find out. But congratulations, well done, Liam. That's a great start to the year. Okay, so we'll go through your NAS, XBX, Pound USD. We'll go through dollar pairs as well. We do have CPI later today. FX Wolf, good morning. Hope you're doing good. Tony Gold, as always, welcome to the stream. Pound Yen, Euro Yen, Dollar Yen. Okay, a bunch of Yen pairs we will take a look at. Good morning, Anus, as always, welcome to the stream. Spike, good morning. Hope you're doing good. Daniel, good morning. Welcome to the stream. Ben, good morning. I'm doing good. Hope you are too. Check oil. Okay. Want to know if we can reach 73. We will have a look. See Daniel back in dollar longs this morning after getting bullied by yen pairs yesterday. Yeah, yen pairs were exceptionally bullish yesterday. So yeah, anyone short would have been definitely taken a loss or some losses with those positions. Again, it's all part of the game. As long as you manage your risk, losses are inevitable. But we'll take a look at NAS. We'll go through XBX as well. We'll go through a bunch of dollar pairs, and then we'll take a look at the yen pairs. So yeah, dollar, I'm still overall looking for upside. I'm still looking for strength in the dollar, and presumably just because of where we're trading, not necessarily because that's what I'm expecting the market to do, but down at these lows here, it doesn't really make much sense for me to sell. I know we do still have this bearish pressure in the market, which is still somewhat of a bearish trend, but we have crept into some big levels here, so I'm presumably looking to buy in these regions here. Doesn't mean you can't go lower one more time or even break through, but I'm only looking for buys around these prices, 102, 101, and then if we get up to these prices, then I'm looking to sell. So predominantly I'm still looking for dollar strength. So dollar pairs, I'm still looking for them to head lower. If we take a look at NAS 100, that's just created not new highs, but has broken through that area. It said yesterday, if we could hold into this area, there could be some nice sales. Didn't see much of a reaction at that area. I think this is the time we had, was that close to the ETF news? I'm not too sure. But we had price kind of spike around, but now it's broken through pretty aggressively. So potentially could be seeing price coming back to the highs and maybe creating new highs as well. NAS 100 in the higher time frames is still showing a lot of bullish momentum. And the fact it doesn't look like we're slowing down either. So I wouldn't be surprised if NAS does go and creep to the highs there at 16,950 and potentially some new highs at 17k just above it as well. So I'll be focused on the buys. S&P, we did see some upside there as well. This one has just created new highs past this point, and we do have the previous weekly, monthly swing highs here at 48.20, which I do still expect to be taken out, just copying what US 30 and US 100 did a couple weeks back as well. So I still do see more upside for US 100. Again, I'm not too sure if we get some decent pullbacks because we've just taken out the highs. I wouldn't really be looking to buy the market anymore, really. Yeah, not really the best place to do that. The move's kind of left the station already, so I would kind of just be on the sidelines, really. Maybe you might get a retest of some of these areas, but quite frankly, I'm not so keen on it just because we created the new highs, but I do still expect another move higher to take out 48.20 and basically just copy US 30 and US 100. So S&P now is still looking pretty bullish. I'd imagine US 30 of somewhat the same is bullish, but of course struggling at the highs there a little bit, maybe because he's some retracement. If we take a look at the dollar pairs, as I was saying, Still looking for more strength across the board for dollar. So pound USD, Euro USD still looking at more downside. Of course, at the moment, we're kind of just seeing consolidation across the board. Potentially maybe today's CPI news could be the catalyst to kind of break things out of that fashion, and maybe we could see some momentum, some trending markets again. So that's kind of what I'm hoping for. As we can see with pound USD, more or less equal highs, equal lows. Haven't really done much for the past month-ish since, 14th of December, it's the 11th of January. Haven't really done much, haven't really gone anywhere with pound USD, but I'm still looking for something like this in terms of the short opportunity for some sales. So I want price to break lower. Still kind of got that head and shoulder pattern, sort of, if you will. If you can get that right shoulder for me, that would be nice. And then, yeah, some shorts. Once we break through 1.26250, then I'm interested in pound USD, but I am still bearish on the pair. We've had a pretty nice bullish trend, but it does look like that bullish trend is starting to tire, starting to exhaust, and we could be looking at some retracement or maybe a reversal. We will have to see, but I am looking at some downside for pound USD. And we are fading at the highs there a little bit, but again, I'm still not keen trading in this area. So although maybe there could be a down move of that sort, but it wouldn't be a move that me personally that looks to take. It's just way too choppy in this area. I don't think I'll be able to find a good high probability trade, but I know I won't be able to find it. So yeah, I'd wait for price to break out that consolidation, and then I would focus a bit more on pound USD. But this still remains the number one opportunity I have on that pair. Euro USD, something similar as well, still consolidating. Kind of did break outside a little bit, but nothing too convincingly. Need price to really rip through for me to kind of consider, okay, we've had a breakout. Maybe price is trying to push higher, but at the moment, we had a slight break and price came back in that range pretty aggressively as well. So could be seeing price just continue back and feel the range back to the lows, more or less 1.09. So as long as we don't break through the high, that's what I'll be expecting. And that's kind of the same analysis across the board. Dollar CAD, messy price action, still sideways. Aussie dollar, still sideways there. Dollar Swiss, still sideways there as well. New Zealand dollar, still sideways there as well. Gold, a little bit sideways for that one, but still resting on key support. Silver, that one is still sideways as well. So it definitely does look like dollar is waiting for a catalyst, waiting for something to get going again. Because, yeah, the price literally hasn't moved in at least from these areas for a good week or two now for the dollar pair. So I wouldn't really look to touch them probably till after CPI. I think that would probably be a smarter decision to wait for CPI, see what happens there. Maybe you should continue ranging, or maybe do break out, and then trades become a little bit more interesting. But let me know what you're looking across the board for the dollar pairs, if you're looking to buy, sell, or you're kind of just waiting on the sidelines. I'll go through the yen pairs in a second. We'll take a look at oil as well. Patrick, good morning. Welcome to the stream. Hope you're doing good. Liam, I have gone with Secure the Bag as funded sponsor. Okay. Haven't heard much of Secure the Bag to be honest, but hopefully, no issues with them. Lauda, good afternoon. Hope you're doing well. I missed the stream yesterday. No problemo. It's recorded on the channel. You can take a look whenever you want to. But welcome to the stream today. Hope you are doing good. Hazim, welcome to the stream. I'm long Aussie dollar 0.668. What do you think? I will take a look. George, what is up? Welcome to the stream. Hope you're doing good, my man. I'll go through some yen pairs now. So, yen pairs have been very, very bullish across the board. We saw a big move yesterday. Price was pumping high. Of course, we had a look at the Japanese stock market. And that one was having the time of its life. As we can see, some pullbacks, which of course would be anticipated. But overall, very, very strong candle close yesterday. And we potentially could be seeing another breakout of this nature potentially again. It's a bit more of a shallow breakout, so I don't expect us to go too far in reference to these bigger consolidations. Normally they give us bigger moves, but overall, yeah, yen itself is very weak, and of course the yen pairs are seeing a lot of upside because of that. Again, for myself, I'm still looking for shorts of the yen pairs, so not really interested in taking buys. Not that there aren't any buying opportunities, just for the swings I'm looking for. I do decide that I'll probably have a little bit more luck going to the downside than going to the upside, because a lot of the yen pairs are quite overextended in the higher time frames. They're approaching some big levels, so I'm not really looking for intraday buys with the yen pairs. More looking for a bigger swing, and I'm kind of waiting for the sell opportunities. But at the moment, they're all very, very bullish. So looking at pound yen, big break of 184. Potentially could see price have another kick higher. I said if we do break through 184, I'm looking at price coming to these areas here. So that is 186, and then we've got the high up there, 188. In terms of buying opportunities, the only place that does make sense would be 184 down there. Looking to capitalize on some buys closer to this level. Right now, kind of in the middle of nowhere, really. I'm not really seeing much value in the current price action, and at the moment, we're kind of just consolidating. So I would kind of wait to see if pound USD, if pound yen can retrace, and that could give a nice opportunity to kind of just follow the momentum and take price higher. But yeah, across the board, yen pairs still look bullish. Swiss yen, I wouldn't really touch this one. This one's created new all-time highs, but yeah, it's just far too bullish for me to do anything with that one. CAD yen, this one's cracked through a big level on the daily chart as well. So potentially could be seeing pound CAD yen, confuse my pairs today. Could see CAD yen push back to 111. Dollar yen broke through that resistance, so I'm kind of putting a pause on my bearish bias. At the moment, I'm still not really keen on buying dollar yen. I'm more inclined to sell it. But with that closure, strong daily candle closure above that level, kind of puts a spanner in the works. I have to wait for price to at least get back underneath that for me to even consider looking to short again. But I'm still interested in the move like this, but at the moment in time, it does not look likely. So that's why I'm kind of putting a pin in that idea for the moment. Of course, dollar yen could continue high. It doesn't have to do what I expect it to do, of course. But if we do see a nice recovery, price comes back below the level, things get interesting, and I might be looking to play some shorts. But of course, we're a long, long way from a setup like that. So it's just waiting to see what dollar yen does, how it progresses. Do we start using this as support and start pushing higher? Then of course, I'll probably scrap that bearish bias altogether. Or do we just push right back down again today? Then yeah, maybe shorts become a lot interesting for tomorrow or sometime next week. But yeah, still looking to see if we can hold 145. So I need to see a strong close back underneath that level for me to start looking for some sells. Is anyone trading any of the yen pairs today? I'll take a look at euro yen as well. I think that's the only yen pair I didn't take a look at. Yes, I'm still holding my pound Aussie position. That was just been moving sideways since I entered on Monday. Still holding my level of resistance, but yeah, it's just been up and down, up and down. We had some Aussie news. We had Aussie news twice this week. We had the Aussie news on Wednesday. Was it Wednesday morning? We had Aussie news yesterday, and I think the day before as well. And both of them have been in my favor, but it just hasn't really got price going. So you can see price is still holding my level of resistance, but since I entered on Monday, which was back over here, price has just been moving sideways. Still respecting the area, but again, not great price action, to be honest. I would like price to kind of tap my levels and then just kind of go. Of course, that's the best kind of possibility. Sometimes price may dance a little bit before pushing down. But yeah, I think this one, again, is kind of in the same ballpark as the dollar pairs, which are kind of ranging. I think price is probably waiting for CPI as well for pound Aussie. Of course, it's not really a direct dollar pair, but CPI does move the markets, even if it's not dollar related, as in terms of dollar is part of the currency of the market. dollar does move, pretty much all pairs. So I'm suspecting price is kind of just following the dollar pairs at the moment in terms of just consolidating, waiting for a catalyst to happen. Whether it's in my direction or not, of course, will yet to be seen. But I'm still bearish on the pair, still holding the position. Stop loss is up there, 1.90629. If I do get stopped out from the news and price comes back down and gives me another entry signal, I will look to just jump right back into the trade, to be honest. As long as we hold that level, I'm still inclined to short the pair. So yeah, I'm still holding pound Aussie, but yeah, just sideways, in profit, out of profit, in profit, out of profit, in profit, out of profit, like a yo-yo. But yeah, still holding that position. Euro yen, again, looking strong. Again, Euro yen for me, I'm still looking like this as a big head and shoulder pattern. Left over there, head and possible right shoulder. So I'm not really expecting this to start flying to the upside. Of course it could, but I'm more kind of gearing up for some sales back down again. Doesn't mean I'm looking to short it, however. It's still a pretty aggressive short because pretty much all time frames are pointing up. Monthly, weekly, daily, all the higher time frames are still showing a lot of bullish momentum. So trying to short Euro yen and trying to call the top, of this move here is very, very difficult. I'd rather price gives me a bit of development first, maybe break through some lows, and then I'm interested in the sell. So it'll take a while for that setup to occur. So I'm not really looking to short just yet, but I'm not looking to buy either as well. And as we're coming back into some resistance here on the left, that prior high taken across. Price is struggling to break through it as well. So yeah, with Euro yen, I do anticipate some downside, but it's just a little bit too aggressive for me to start looking for trades with Euro yen. But I'm bearish on the pair. I had a look at Nasdaq a few minutes ago. If you scroll back, quick if you scroll back maybe 10 minutes or so, you will see analysis to that. Okay, we'll take a look at Aussie New Zealand dollar. Russ, what is up? Do you think Swiss yen could go to 173 as a breakout has happened? I'll go and take a look. George Pansichev had a very corrective retracement back into a nice level on the 4H, looking for a chance to go short. Might be next week. I'm also looking at a similar opportunity on pound CHF as well, looking to short. I will go over that in a moment. Andreas, good morning. Thoughts on pound NSD. Okay, we'll take a look. Russ Dells, CHF JY fundamental, don't see this price as value. It's so overvalued. Yes, I do expect CHF JY to eventually take a big dive to the downside. We created new all-time highs not long ago. As we can see, these are prior all-time highs from back in 1980. So a very long time ago. Now we've taken out those highs. So I do think we're going to see a correction. Again, I'm not suggesting price is going to completely capitulate to the downside, but a correction is pretty likely. And again, even the correction just back down to retest the prior high is definitely a worthwhile opportunity to look for, because there's a lot of pips in that move. If I measure it, we're looking at 1,000 pips. So again, we don't have to take advantage of all those 1,000 pips, but you can definitely take a nice piece of that cake if we do start showing some bearish structure. But at the moment, price is still just very bullish for Swiss yen, as with the other yen pairs, of course. We created a new high again yesterday, so I'm not really interested in selling Swiss yen just yet. But once I see some development, some bearish structure stepping in as such, then yeah, maybe I can get some shorts going. And start looking to sell it. And again, I won't try and stretch the trade too far because we are still counter trend. But 173 up there potentially. I mean, I don't see much stopping price getting to 173. We could get there. I'm not really interested in looking to buy the market. As I've just stated, I'm looking for price to eventually roll over and see some retracement, and those kind of counter trend moves are the moves I'm interested in. So if you get to 173, 172, 174, I'm still just waiting for price just to turn around and give me some bearish setups. But of course, I'll be patient with them. I'm not eager to jump into sales because again, if I am right with that retracement I was talking about on the higher time frames, there's a long way to go. So I don't really have to short at the top. I can look for the second, third, fourth lower high and get a much safer entry that way. But yeah, I'm only looking for shorts for Swiss yen. Even the way that we're breaking higher, it's still a very corrective move. You know, we're lacking kind of a lot of momentum. Yeah, there are some, you know, glimpses of momentum in the moves here, but overall it's a very corrective move up. So I don't expect us to go too far before coming down. So yeah, just waiting for some sells. What pairs I said I'm going to take a look at? I said pound CHF, didn't I? Okay, I'll look at Aussie dollar first, then I'll go over to Aussie New Zealand dollar, pound CHF as well, pound NZD2. I will take a look at those pairs. Which pair did I say take a look first? Aussie dollar. So yeah, Aussie dollar, another dollar pair. You said you're long on this one, if I'm not mistaken. Yes, I am long Aussie dollar, 0.668. What do I think? Okay, where is 0.668? 668. So around these lows here-ish. So yeah, I mean, what I think at the moment in terms of the intraday kind of price action, it's just kind of consolidation. It's difficult to say what the next move is for Aussie dollar because it's not clear the price action. Of course, respecting highs and respecting lows pretty well, but overall price is just ranging here. So it's kind of 50-50. When a market is ranging, I try not to investigate price action too much and kind of just leave it to probability and just kind of think, okay, it's 50-50, which way is price going to break? Then whenever I see the break, that's when I start to investigate a little bit more because I know there's an opportunity not too far away from that, from once we do get the breakout. But now it's just difficult to see what price is going to do next. Again, I'm still kind of dollar bull, so I'm still anticipating more downside for the dollar pairs. But in terms of actually looking to short the market, that's a different story because, as I said, I can't see any good opportunities to short at the moment. So with Aussie dollar, if I do see a strong break of the lows there, then I'm interested in a pullback and a retest of that area. But of course, we are a long way away from that at the moment. But yeah, I mean, I can understand looking to long at the lows. We've of course rejected that pretty well, and we are retesting some broken resistance turn support here. So there is a reason for us to expect some upside if the market is going to continue this bullish structure. High, higher low, higher high, potential higher low, higher high. So I do like the longs there, but it just goes against my high time frame bias. So that's why I would refrain from looking to long. So anything in there, I'll just put it up to probability. I wouldn't really look to investigate too much in price action. I mean, if you're looking to long from 0.668, I'd say as long as price holds that area, you're still looking good. I would assume your stop loss is somewhere below the lows there, which will be a pretty safe stop loss. If price is going to break it, it's either a fake out or, you know, price is just moving against you and likely to head lower. So yeah, with Aussie dollar, I'm short bias on the pair, but as I said, I can't see any opportunity in terms of looking to sell it. So I'm kind of on the sidelines with that one. Same thing with NZD/USD as well. That one's kind of just moving sideways. So I don't really have much to say. And a very, very similar kind of setup to Aussie dollar. But again, it kind of goes against my high time frame bias to be looking to buy the dollar pairs, because I'm still expecting dollar strength. Long-term dollar weakness, but at the moment, I'm still expecting dollar strength. So yeah, I'm kind of just on the fence really. I'm kind of on the fence. Hopefully we can get some opportunities after CPI, but at the moment I can't really see anything worthwhile. So I'll just wait for price to react to CPI, do its thing. Hopefully we break out some sort, and then I can start planning some better opportunities. Okay, so I will take a look at Aussie New Zealand dollar. We'll go through pound CHF as well, and pound NZD. Yes, I forgot to take a look at oil. Take a look at oil as well. Touched on Euro CAD. I haven't taken a look, but I will add it to the list. Where is oil? There we are. So yeah, for oil, overall still bearish price, but again, another pair that's just consolidating. Difficult to find good opportunities in this type of price action here. You can see we're still trying to print these high lows here, but still printing low highs as well. So again, there is no kind of clear opportunity to trade this, in my opinion. That price action is absolutely ridiculous. Up, down, up, down, up, down. There's no kind of overall structure to it. There's no kind of overall direction to it. High time frames, yeah, we are still pretty bearish. Seeing this down move here. So that's kind of where I'm determining my high time frame buys from, and looking for something like this to happen. But in terms of actually trading it, I'm not seeing any opportunities here to short. It's just very, very choppy price action. Again, it's very, very important that you wait for good opportunities to enter the market, and not just enter the market because you think price is going to do something or it should do something, because quite frankly, it doesn't have to do anything. And in these conditions, it's difficult to predict accurately. Well, not even predict, but just find good opportunities that that is worthwhile taking. But all I can see is just up, down consolidation. Prices printing some high lows, also managing to print low highs at the same time as well. So we kind of just got like a wedge pattern, if you will. And again, sooner or later, I'm expecting a breakout, either up or down, but I wouldn't touch price in those conditions. If you are looking to buy, I would wait to see if price can drop at least one more swing lower, and then start to consult price down there, because there could be some nice buy opportunities closer to 67, 68. Anything above that, it's kind of a little bit of a guessing game in my opinion. So yeah, that's kind of what I would look at for oil. I'll take a look at Aussie New Zealand dollar, since we're looking at choppy pairs at the moment. We'll add that to the list. So yeah, Aussie New Zealand dollar, yeah, not looking great either. Yesterday I was speaking about the, again, similar pattern to oil we just had a look at there. Successive higher lows and also successive lower highs. It's difficult to see what price is going to do next on a bigger scale of things. Of course, we're kind of just fluctuating between high and low, so potentially we could see another move like this happen. But again, not really my type of trade. I like pairs that are trending, giving us clear direction, and this is definitely not one of them. So I said yesterday for Aussie New Zealand dollar, if you're looking for some opportunities, then of course closer to these areas you're looking for buys. This is where the market seems to be finding higher lows, so looking for buys in these areas makes sense. And I also pointed out this area as well, saying that if we do break back above this, then this could be a nice place to base a trade from. Put a stop loss underneath, take an entry in this area, and look to take it back up to some highs like that. That makes a lot of sense to me, because at least you're buying off a solid level closer to the areas where the market is printing major higher lows in the higher time frame. So buys do look good above that level, but of course we can see in hindsight price didn't manage to break above that level, and has rejected it pretty heavily as well. We might be looking at a deeper test, maybe actually test the trend line before we do push up. But again, I would refrain from getting involved with Aussie New Zealand dollar. Conditions are just very, very poor. If we can get back above that level, then there could be some nice buys. But at the moment, this move could just be short-lived for a move back up again, and the buys there will make a lot more sense. But yeah, very, very choppy pair. I mean, let me know what you are looking at from that pair. But I have to say, conditions are very, very poor. Thank you so much, Scaffy, for subscribing. Really do appreciate it. If you guys are enjoying the content, feel free to subscribe and drop a like and hit the bell. It really does help out the channel, of course, and it keeps you in the loop. I said I was going to take a look at Pound CHF, didn't I? Yes, I did. Pound CHF. Yeah, so Pound CHF, I'm looking at sales as well. Again, difficult to short outright, because the way price is moving, it's just very, 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 very corrective, which I think you mentioned. So it's difficult to find a clean short opportunity, but we are approaching some areas where price could look to top low and form that next lower high. I do think the bigger move for pound CHF is still to the downside. I'm still looking at price coming to these areas. Longer term, I do see new lows past this point as well. But I'm looking for a lower high from either this area or this area just above it there. And yeah, those are the areas I'm looking to sell from. Of course, we're in the first one right now, but at the moment in time, we're still looking relatively bullish. Market's still finding support at these areas here, so I'm not really looking to short just yet. I need to see some signs that the market is shifting structure, breaking out that kind of corrective nature, and looking to print a lower high. And if not, you could still, of course, break higher. And as I just stated, I do have an area of interest slightly higher up, which price might want to go and test as well. In fact, it would be nice if we do have one more big push up, because the sales will be even bigger, risk will be bigger. And I still do like this level a lot. Really nice support, which of course the market just broke through with a lot of momentum. It will be nice to see a retest of that area there as well for some shorts. But either which way, I am looking at us coming back down to 1.065, 1.06 in the next kind of coming week or so. But I think he did said it might be shaping up for next week, and I think I'll probably agree with you there as well. We'll see what CPI does to the market this afternoon. But yeah, entries, or at least good entries anyway, might not form till next week. And again, patience does pay. If it does set up and it does give a nice trade, it could be looking at a really healthy risk reward trade here, and a good trade with good probability behind it as well. All the higher time frames are pretty much bearish, monthly, weekly, daily, all pointing down. So in terms of synchronicity between the time frames, it all makes sense to short pound CHF. Just waiting on a good opportunity to do it. So hopefully we can see that opportunity set up. I'll take a look at pound NZD and I'll go over to EuroCAD. So with pound NZD, I'm still looking at downside for this pair as well. It did break above my level. Again, I wasn't really looking to short pound NZD. I was debating between the two, between pound Aussie and pound NZD. But pound Aussie looked like the much better opportunity for me, better risk reward, better entry level. There was a lot of better confluences with pound Aussie, so I was just predominantly focusing on that pair, looking for entries on that pair. And of course, I'm in a trade on that one. Pound NZD, pound Aussie, very, very similar pair, so I'm expecting both of them to do a similar move, but I chose pound Aussie. Pound NZD did break above. It looks like it's trying to break back below, but overall, the price action is just quite messy, to be honest. And of course, pound Aussie is quite messy too, as we can see, so it's not like pound Aussie is doing anything crazy. But yeah, I want to see price get back below this level, 2.04. This is the level of support I highlighted that I'm expecting another lower high to format. Again, we've been seeing some nice lower highs and lower lows as we've been trending down, but now it's starting to break above that area, and it kind of puts a spanner in the works. So I'm kind of waiting for price to close back underneath and start rejecting again as resistance, and then I would be looking for something like this to happen for pound NZD, a big swing to the downside into these lows at 1.98 more or less. Of course, there are some obstacles we have to consider along the way, like that low there, but yeah, essentially I'm looking at a bigger kind of reversal of this bullish move and us kind of coming back down again. So yeah, I do see a lot more downside for pound NZD. I'm only looking to short the pair. But it would be nice if we can break back below this level, and then yeah, shorts will be looking good again on a retest of it, or maybe even some retest of this structure here. If we break through, retest the low there, that could be a nice place to take a short. But yeah, nothing just yet, because of course this is now support which price could hold and see some upside from. So I would be careful there with pound NZD, but the bearish bias is still intact for that one. Euro NZD, the thing is with pound NZD, we've kind of already had a nice retracement, so I'm expecting to see us starting to sell off pretty soon with Euro NZD, which of course is a similar pair to pound NZD. I'm expecting a similar move for the pair as well, back to these lows. I'm expecting a big move down, but I would want to see retracement for this one first before looking to sell. So it's either we're going to see pound NZD drop and Euro NZD drop out of the consolidation, or we're going to see pound NZD retrace higher, then probably drop, and Euro NZD retrace and then drop. So it just kind of depends how the market wants to shape up, because again, they're very similar pairs. They kind of move together, maybe not as much, but they do kind of do the same thing in the same direction. And you can see it the way the market's moved as well. Bullish trend looks like it's reversing. Pound NZD bullish trend looks like it's reversing as well. So just the same move, maybe at different speeds and different strengths. But yeah, pound NZD, I do see a big move down. Euro CAD, that one's been absolutely awful in terms of price action. The CAD pairs haven't been particularly great. Aussie CAD, pound CAD, pound CAD's been alright. Aussie CAD, New Zealand CAD, Euro CAD, those CAD pairs in particular have been absolutely awful in terms of price action. You can see Euro CAD consolidating, Aussie CAD doing something similar, and NZD CAD there too. Absolutely. Pound CAD's been alright. We did see a nice breakout higher, but yeah, not great. It does look like potentially the market could be forming a low and maybe looking at doing something like this back to the highs. But again, would I look to place a trade there? Probably not. Conditions aren't great. You know, we're basically rejecting high, rejecting the high, rejecting the low, rejecting the low, rejecting the low. So overall price is just moving sideways. Not great conditions for myself. Now, as I've stated many times, I'm looking for trending market conditions, higher highs, higher lows, lower highs. This one is just rebounding highs. So if I am going to take trades in these conditions, I do want to be trading closer to these areas here, and I'll be able to find much better opportunities. Thank you so much, M Hafiz, for subscribing. So if price is up high or down low, I can find much better opportunities there to short and buy. But here, it's kind of 50-50. You know, do we break high? Do we break lower? It's up in the air. Maybe because we just had that down move in our price, maybe reacting some mid-level there of the range. Maybe we do push up, but again, it's a big maybe. And when I take my trades, I don't want to be saying maybe. I want to be confident. Not that it will work out, because that would be delusional, but at least confident with the analysis and confident that probabilities on my side and my edge, is at play here. But EuroCAD, not so much. So yeah, if you're looking to trade this, I would definitely at least wait for a break of this range here, strong one as well. Then maybe there could be a nice trade back to the high of the range there, or even back to the low there as well. That could be something interesting there on a breaking test of these areas. Anything else, I would avoid really. I would avoid, just because it's just way too choppy and no kind of clarity with the direction either. But that's kind of the best I can see with EuroCAD. Not on my watch list for myself, because it is ranging. But if you are going to trade it, yeah, I would definitely suggest waiting for a break of the high, break of the low before looking to do anything, because conditions aren't great. Yeah, I did miss a buy opportunity on pound CAD last week, which would have been a nice winning trade at the moment. Probably been looking to swing it a lot further though, so it would be a long way from target. But I missed the I didn't miss the entry, it just didn't give me the entry candle I was looking for. It was off this candle here, didn't quite engulf the previous candle, so it wasn't a valid entry for myself. And then the next candle just absolutely blew that candle out of the water, and that was looking pretty bullish. But as a trader, things that happen all the time. Sometimes you get an entry, sometimes you don't. Sometimes price wicks you out and you have to re-enter. Sometimes you're just completely wrong with your trade. Sometimes you're right. And as long as you're managing your risk, protecting your downside, making sure some of your wins are bigger than the sum of your losses, then you're doing good. You're doing good. CHF pairs are still very, very choppy as well. Not really interested in any of them as well. So my watch list at the moment, I'm not gonna lie, is pretty thin. It's pretty thin at the moment, and I'm kind of just waiting for the market to start moving again, and then I'll probably be looking at a lot more pairs. But in terms of good quality opportunities, I'm just managing my trade with pound Aussie, and yeah, nothing else. I'm not really waiting for a retest of anything. I'm not really waiting for price to pull back anywhere really. Of course, there are some pairs that do look okay that need a little bit of work, maybe a breakout or something, but it's not like an opportunity is imminent. I'm kind of just waiting to see what the news does, and I can probably react and balance some trades off that. But right now, I'm just focusing on pound Aussie. FX Wolf, I missed a lot of trades last year. Yeah, I would suppose you weren't the only one with that. I did miss trades last year as well. And again, you'll miss quite a few trades again this year too. The important thing is the reasons why you missed them. If you missed them just because you weren't at the market, you were doing something else, that's just life. That happens. If you missed them because maybe you failed to recognize the pattern at the time, or maybe you're looking at something else, or you were distracted, then of course that can be improved as well. But it's the same thing. I always look to and compare trading with sports as well. Even the best athletes in their sports do miss opportunities, do make mistakes, do things that you think, why on earth did you do that? But again, overall, they're still at the top of their game, and they're still performing very, very well, and a very hard discipline as well. So the fact is, you will still miss trades this year, even if you are 100% on point. You still will miss trades, and the thing is, you don't need to take advantage of every single trade as well. Which is the important thing. So the best way to go about it is just look at the trades you missed. What was the overall reason of them? If it was lack of concentration, then you can look to focus and try and make sure you're concentrated before your trading session begins. That could help catch you maybe an extra trade or two per month or something, which again could accumulate over the year. But try not to beat yourself up too much about it, because it's inevitable that you will miss trades, especially if you're on the lower time frames as well. You're going to miss a bunch of opportunities. For me, as a swing trader, I still miss opportunities, but normally I do plan my trades quite far in advance, so I can see what my trades most likely will be for the following week. So I kind of do have a close eye on it, and I'm keeping tabs on it. But the lower time frame is a bit more fast paced, so I can definitely understand that. But we shall see. But yeah, pound Aussie is just absolutely everywhere, up, down, up, down. And we kind of do have the highs up here, which I'm thinking potentially we might see price spike through off the back of CPI, and then maybe come back down. So I could be looking at getting a re-entry if that is to happen. If we're going to see a big move up, take out the highs, and then potentially give us an entry signal after that, then I'll look to re-enter. But yeah, I don't really like how price is ranged. It would be nice if it was a bit more corrective and moving up higher. So if it was like this, rather than just sideways purely, because you got some highs up here which could be taken out. But of course we shall see. Maybe price just dumps. That would be fantastic. But this is still the only opportunity that does look good to me. Even if price does break through this level, I'm still interested in shorting the pair. The only time I would probably back away from shorts completely is if we probably break through this high here. If we break through 1.93, then I'll probably just throw my hands up and stay on the sidelines. But as long as we don't take out that high, if we pull back even greater, I'm still looking for us to develop and come back down again. But again, as I'm looking to push trades further this year, there's going to be a lot of sitting on my hands, a lot of kind of just letting the market work in the background, because trades like this, for example, if it does play out and head to take profit, this could probably take maybe 2 months to play out. I'm probably calculating 2 months maybe. And again, in that 2 month span as well, I'll probably be looking to add positions to the trade. So this is the original position, and then if it does start moving in my favor, I'll look to add a second position, maybe in the third position if I'm lucky enough, to try and really take advantage of the opportunity. Because if it's going to take 2 months to play out, then I do want to make sure I'm adding to that trade, making sure those 2 months I'm taking advantage of as best as I can. And of course, if I can get 4, 5, or 6 of these type of trades per year, that's just going to really drive your P&L. So hopefully we can take advantage of these opportunities this year. That's the main kind of, not main goal. The main goal is just to trade and be profitable. But that's kind of the main thing I want to focus on in terms of improving from last year, taking advantage of trades better, and not be too concerned with win rate as well. Because I did find myself doing that a lot last year, focusing on win rate too much when it was not really important. Of course, you do want to win more than you lose, but at the end of the day, you want to be the most profitable trader you are. And the win rate normally takes care of yourself. If you're focusing on the right things, which is the reasons why you get into the trades, making sure they're of good quality, the win rate will take care of itself, where it's going to be higher or lower, and the risk reward will take care of itself as well. CPI might help speed up the move. Yeah, I'm hoping for that. I'm kind of looking at CPI as being the catalyst for the rest of the market, really, because the market's just been so dry at the start of the year. I remember last year, 2023, the market was flying this time right now. Yen pairs were doing the most, so I was kind of looking for that to happen this time, in January. Of course, it's still the 11th. We could see things pick up in the next few days and have a really strong end to the month. So that could definitely happen as well. But the markets have been very, very dry across the board, not just pound Aussie, which is the trade I'm in, but as we suggested, dollar pairs nowhere. The only pairs that have been moving, the yen pairs, I'll give them some slack. The yen pairs have been moving, to be honest. I just haven't been interested in buying them, so it's not really an opportunity I was looking to take advantage of. But yeah, they've moved a little bit. I'll give the yen pairs some slack there. But other than that, everything else pretty dead, pretty dead. Even gold and silver as well. And it's also with the kind of position you need to keep an eye on your FP challenge. They have an equity-based drawdown. Yeah, that's another thing I was taking into consideration. At the moment, I'm still risking 0.5% per trade. So with the bigger position, if the risk reward's like 1 to 9 something. Let me get back to the trade. 9.62. So if that was to run all the way to take profit, that would be 4,500 and something, because of course I'm risking $500 per trade. So the overall equity for me to hit 5% drawdown, price would have to, it wouldn't be possible. It would have to be at least 10R for me to do that. It would have to be 10R and then price for me to come back against me. But if I do increase my risk to 1% per trade, then that becomes a little bit interesting as well. So when I do increase my risk to 1% per trade, I'm going to be a little bit more aggressive with my trading stop loss. On my personal account, I can be a little bit more loose and kind of just let the trade have much room as possible. But you're definitely right. When I start risking 1% per trade, I do have to be a bit more aware of that. But at the moment, with the 0.5% risk, for me to go 5% in drawdown, I have to go 10R in drawdown, which would be pretty much impossible with the risk reward I'm working with here now. So at the moment, I don't really have to consider that too much. But yeah, when I do increase to 1%, I'm going to have to definitely take account of that. And I'll just be the way I look to manage that is just be a bit more aggressive with my trading stop loss. But yeah, I definitely did think of that when I was setting the new rules. And again, that's kind of one of the big reasons why personal capital is so important. Even if you're starting with a small personal capital, you want to start somewhere and you can build that up as you go along. But that personal capital, you don't have any restrictions in terms of max drawdown, let me rephrase that. You're supposed to have restrictions that you implement yourself in terms of your max drawdown, your max loss per day, per week, per month, how many positions you want to have at one time, your risk per trade, max loss streak, whatever. You're supposed to have those rules in place 100%. But of course, they're not going to be as strict and as tight as prop firms. Like for me, for example, as long as I'm not 30% in drawdown on my personal capital, I'm not really bothered, to be honest. I've got 30% gap of leeway, and as long as I'm not hitting 30% of my personal capital, I'm just trading it as normal. And of course, the odds of me getting to 30% in drawdown with 1% risk is very, very slim as well. So, in drawdown, of course, it's not comfortable, it's not nice to be in drawdown, but I know that before I start, cutting things off and start really looking at my trading, I need to be getting closer to 30%. I know that with my system, my max kind of drawdown for my back testing is roughly about 9%, 9 consecutive losses, but I know that potentially could get a lot bigger, maybe 12, 13, 14, 15, because when I'm back testing, I don't really have any kind of raw emotions. And also, data in the future, charts in the future could change as well. So I could incur more losses on my strategy than I did in the past, because the past is only an expectation of what can happen in the future. Just because your max losses was 8 or 9 in your back testing doesn't mean it can't be 12, 11, 13 in the future. So, I've got a lot of room to play with. And again, I don't trade very often as well. Average taking 1 or 2 trades per week. So for me to achieve, even 15% in drawdown, it's going to take a big job for that to happen. So with the personal capital, I'm not really thinking too much. I'm kind of letting the trades play out, lose trade stop loss, trading stop loss, and kind of letting price do its thing. But of course, with the prop firm, it's kind of their rules, their capital, their restriction, and of course I have to abide by that. Which may mean I'm not as profitable on the prop firm accounts as I am with my personal. Which again, I'm not really complaining too much about, because with the prop firm capital, it's not my capital. If I do lose an account of the prop firms, it's not I lose my account, I lose their account. So I can't complain too much really. And the way I just see prop firm anyway is just the leverage to help build my personal capital even quicker. So I'm not complaining about the restrictions, but I'm just saying it's important to have the personal, because you have your own restrictions on that personal capital, and you can decide how you want to trade to see fit. Of course, you have to be disciplined though. You don't want to break your rules. That's how things get messy. But personal just gives you a lot more leeway, and that's how trading should be. If you look at some of the great traders, a lot of their kind of drawdowns between 10 to 20%, and that's like typical normal healthy drawdown, 10-20% on their accounts. So when you kind of restricting yourself to 10%, again, 10% is a decent buffer room, but if you take enough trades, you probably eventually hit 10%, which is why I always start with 0.5% on the challenge accounts, and then when I got a bit of buffer, then I look to increase. Pound Aussie is ranging big time at the moment. Is anyone in any trades at the moment, or they're waiting for CPI? And if you are waiting for CPI, I think that is a pretty smart move, to be honest, because price action isn't looking great across the board, to be honest. And the thing is, we might not even see price move too much, which would be very anticlimactic. But yeah, dollar pairs not looking great at all. I mean, maybe there could be some shorter term opportunities on the yen pairs for some longs, but yeah, quite frankly, I just don't want to look to buy the yen pairs simply just because of where they are on the higher time frames. I'd rather be waiting to sell them than buy them, but not really interested. AS, I'm looking for USD CAD, but waiting for CPI to hit before considering entry. Okay, yeah, makes sense. Looking for some sales in dollar CAD. Yeah, I'm also looking at sales for dollar CAD as well, but I want price to move a little bit higher first. Where's dollar CAD? Yeah, I was looking for price to come up here before I start looking for some sells. And then look to take it back down again. But yeah, price action has just been very, very choppy. So we may not even get up there. We could just see price push down. But yeah, waiting for CPI probably would be the smart thing, because maybe CPI wants to have some fun, take out some traders, and then start pushing down again. That could definitely be a big possibility. Daniel, I am in a New Zealand dollar long with a reasonable large stop loss, accommodating for CPI. Okay, that makes sense as well. Took 2 positions, 2 this month, 1 win and 1 break even. Nice. Again, taking it slow and steady. And again, the conditions should dictate the frequency of your trading. In an alternate universe, if the market was moving a lot, maybe you've taken 4 trades this month, but you should let the market invite you into the trade. Potentially you might end up taking 3 trades, 4 trades, 5 trades in a week. Maybe you go a week or 2 without trading because the markets aren't showing you opportunity worthwhile your time. Yeah, just taking it slow and steady. Of course, trading is a marathon, not a sprint. There is no rush. But yeah, pound Aussie is still my first position of the year, and still sitting in it for the past 4 days. Yeah, into the Monday, Tuesday, Wednesday. Yeah, 4 days. Daniel, although if it prints hotter than CPI, then I may exit before taking a full loss. Okay. Are you expecting to see dollar weakness off the back of CPI then? Back to 4% profits in the FP. Nice. Only 4% left then to 8%. 8% target. I was thinking it was 10% for a second, but yeah, only 4% left. I mean, I say only 4%, but yeah, the important thing is just not to rush it. To be fair, just not to rush it. There's no point. There's no time limit in it. You spent hard-earned money to take the challenge. You don't wanna fluff that just to speed things up again, which I think a lot of people probably be itching to just pass their challenges, especially if you've been sitting break even for a while, maybe in and out profit, like I'm kind of doing with my challenge, in a little bit of profit, back to break even, in a bit of loss, bring it back to break even, in a bit of profit again, back to break even. That becomes a little bit unresting, and you're kind of thinking, yeah, let me just speed this up, let me risk a little bit more in the trade, and if it does play out, hey, I might hit my take profit. And yeah, I think prop firms do plan for that as well. You know, with when they took off the time restrictions, I don't think it changed the game too much. I mean, it allowed people like me, traders like me, to come into the challenge. But in terms of the people already taking the challenge, I don't think it changed the game too much for them. Some people, yes, will be a little bit more patient with their trades, but I think that's just a small minority. I think most people, you know, whether time limit or not, they're still going to go pretty aggressive. My trade frequency is low compared to the other day traders that only take 1-2 positions trade a week, sometimes 0. I was 4% and gone all the way down to 1% through the losing streak. Happens as well, happens. But yeah, I mean, to be fair, I don't think you're. I mean, yeah, maybe the typical day trade is probably taking a trade a day, I'd probably say. But then again, if you're taking like a trade a day or 1 or 2 trades a day, you probably want to be risking 0.5%, even 0.25% per trade, really, to be on the safer side of things, because you know whatever type of trader you are, whatever your ability, you always will go through a spell of consecutive losses or of a hard time in the market or through drawdown. And if you're risking 1% per trade and you're taking 2 trades per day, yeah, things are going to get very, very messy at some point. Might not have got messy yet, but things will get quite messy at one point, over the course of the year. So if you're taking kind of 2 trades, one or 2 trades per day, I'd say risking 0.5% is probably the best kind of risk to use, maybe even lower. If you're risking 1% per trade and still day traded, then I think for yourself it makes a little bit more sense. If you're only taking 1 or 2 positions per week, sometimes 0, then you can get away with risking 1% because you're not that active in the markets. And a lot of the time, you're giving yourself time between your trades, allows yourself to kind of remove the tilt from trading. You know, especially for day trading, if you're constantly in the market, you know, tilt is a big thing you have to battle with. Of course, tilt's a thing everyone has to battle with, but you know, if you're taking a trade, then the next time you take a trade is like 4 or 5 days later. You know, you kind of nullify the tilt sort of from the previous trade, whether it was a win or a loss, and it kind of keeps you fresh as well, which kind of helps battle losing streaks and drawdown. But yeah, I mean, it's all part of the process. Losing streaks, winning streaks, wins, losses. Just looking to manage through that, really. And yeah, similar to me as well. I think last year I averaged like 1.5 trades per week. At the start of the year, I was averaging like a little bit over 2 trades per week. There's been between 2 and 3, but the second half of the year, I was averaging between 0 and 1, so it was like 0.5 trades per week. But overall, kind of equal, just under 2 for the year. And yeah, it depends on the conditions. Sometimes a bit more aggressive, sometimes a bit more conservative. It really does depend on the markets. Prints hotter than expected. I mean, just realised that it didn't make much sense. I think NFP printing hotter than expected may cause slight inflation rises. Potentially. I mean, again, I'm not really too trying to expect one thing or the other with the news. I'm kind of just waiting to see what price does. Do we break higher? Do we break lower? And then I'll go from there. Purely just looking at it from a technical perspective. But I was also thinking in terms of like win rates and wins and losses. I was thinking because with your win rate, say you have a 60% win rate, so 60% of the year on average, you know, your equity curve will be creating new highs, and the other 40%, your equity curve will be creating new lows or just in drawdown, really. And thinking of trading in that way kind of made things a little bit interesting, because if you have a 60% win rate, that means you're expecting to roughly win six out of your 10 trades. Of course, it will differ. It's not 60% all the time. Sometimes, even with a 60% win rate, your win rate will probably dips to like 40% at sometimes. And of course, sometimes it will go up to 80, but on average, you find yourself around the 60% mark. But if you take that 60% across the year, roughly 60% of the time you'll be in profit, 40% of the time you'll be in drawdown. So as a trader, you have to kind of be prepared to be in that drawdown 40% of the time. And that's just with 60-40. If your drawdown, if your win rate is like 50-50, so you win half your trades and lose half your trades, then you're expecting to be in drawdown half the time, really. And of course, in profit half the time as well. Of course, not consecutive, doesn't have to be back to back, but roughly speaking. So it kind of puts things into perspective of the psychology aspect of things, because, you know, you think to yourself, okay, I got a 50-50 win rate, or I got a 50% win rate, or a 60% win rate. You're kind of happy with that because, you know, at least half the time you're winning, or more than half the time you're winning. But in the course of the year, you do go through long spells of drawdown, long spells of drawdown. 40%, you know, of the year is like five months or something like that, around that area. 5 months of the year you're in drawdown. You know, that if you put that in perspective, that sounds quite difficult. Of course, it's not going to be just 6 and 5. It's going to be scattered throughout the year, but cumulatively, it probably will get to about 5 months of being in drawdown. So thinking of trading that way kind of does help in terms of accepting drawdown, being aware of it, and just knowing that, okay, if I'm in a loss and I'm in drawdown for a prolonged period of time, it's meant to happen, really. And of course that happens for all win rates, but you also have to think of it as, you know, win rate is not set in stone. It does differ. Sometimes your win rate could be, you know, close to 90% for a month, and sometimes it can be close to 10 for the next month as well. And it doesn't mean you're doing anything wrong either, which is a big thing. You know, a lot of people think they're doing something wrong and they look to change stuff. Rightly so, you can always look to tweak and improve, but you should never really look to tweak and improve just after a big losing period. Not just after, anyway, because most of the time it's after emotion, and it's caused by emotion. You should wait a little bit, maybe wait after another winning period, and then look to see what you did right and wrong. If there are obvious mistakes, then of course look to change and improve. But most of the time is out of pure emotion, because drawdowns are normal, even through the best traders to walk this earth go through long periods of drawdown. So, you know, if you're in your journey 1, 2, 3, 4, 5, 10 years, you're still expecting to go through long periods of drawdown, even if you 25-year trading veteran, you're still expecting to go through long periods of drawdown as well. It's just difficult to be in it. That's it. It's just difficult to be in it. Which is also why it's also difficult to keep a funding account as well once you pass it. You know, you're expected to eventually give back those accounts. So I think when I eventually pass the challenge, I'll probably still keep the same risk management approach in terms of risking 0.5% per trade. I don't think I'll look to go to 1%. I think I'll just keep it to 0.5, and then when I get a bit of buffer, then I'll increase it to 1. Bitcoin Euro. FX Morpheus. Okay, we'll look at Bitcoin Euro. I'm not too sure why you'd be looking at that chart, but we'll take a look. 50% win rate means also that half the positions that you are losing half the positions. Yeah, of course you're losing half the positions as well. And again, there's nothing wrong with the 50% win rate. 50% win rate is actually pretty good. It's actually pretty good as well. Which sounds a little bit weird. Why would a 50% win rate be good? Might as well just toss a coin. You got 50-50 chance of getting heads or tails, but in reality, that's a good win rate, because if you can cut your losses short and make sure your winners run, and by doing that, it doesn't mean you have to go for crazy risk rewards. It just means, okay, if I get a win, if it's a 1 to 2 and my losses are 1R, then I'm profitable. You do the maths. So just letting your winners run to 1 to 2 and cutting your losses at 1 to 1, just 1R, you're profitable as well. So yeah, the way I look at it is just accepting those drawdown times, accepting those times of losses, losing streaks, and being able to operate under that pressure and under those uncomfortable circumstances. I think that's literally the hardest part about trading, really. That's the hardest part. In terms of analyzing charts and taking trades and looking to buy and sell, yeah, it's hard at the start, because of course everything's new. It's kind of like learning another language. Maybe not as hard, I would say, but it does look foreign. But over time, you become accustomed and you start to understand. You start to understand techniques, and you don't have to be Einstein. You don't have to be a genius to look for good buying opportunities or good selling opportunities. But it does take a lot of will to see through the down periods and stay level-headed during the up periods. Let me take a look at BTC Euro. Say you have 50% win rate, but your wins are like 2 or 3R, then could you still be insanely profitable? Yes, you probably would be. I wouldn't say insanely, but I would say you'd be very, very profitable. If it's close to the 3R mark, then you'd be very, very profitable. Very, very profitable. Because if you think about it, if your win rate is 50%, you're winning half your trades. If it's 3R, let's say, then let's say you take 10 trades, on average you win 5. If 5 of them are 3R, that means you make 15R. If you lose the other 5, then you subtract 5, you're overall up 10R. So on average, for every 10 trades you take, you make 10R on average. So if you take 100 trades, you take 100R. If you take 100 trades in the year, then you make 100 100R in a year. And if you're risking 1% per trade, that's 100% in a year, which is very, 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 very good going. So yeah, if you can stay consistent with a 50% win rate for 1 to 3, that's very, very profitable. Of course, it's it's a lot harder said than done, because to stay that consistent for a long time is very, very difficult to do. And of course, during the time of the year, you're not expecting 50% flat across the year. Sometimes you'll be up 60, 70, sometimes your win rate will drop to 40, 30, but on average, you'll probably be around the 50% mark. But yeah, if you can get a 50% win rate, 1 to 3, of course, 1 to 2 is still very profitable as well. Of course, do the maths, you figure out some decent numbers there too. But yeah, anything 1 to 3 and bigger than that, that's very, very profitable. A lot of people think they have to be hitting 70% win rate to be considered a good trader or a profitable trader. But if you look at all the kind of the top traders, their kind of average win rate is kind of between the 40 to 70% mark. That's where you find a lot of the best traders, and that's pretty much where most people is anyway. But if you study the best traders, normally their win rate is kind of between the 40 and 70% mark. You got some of the kind of more active day traders who are a bit more close to the 60-70 bracket. Then you got some of the swing traders, the longer term traders, who are close to the 40-50% mark. And again, in terms of their risk reward, will be different between the two, but that's kind of where they are. So people who say, okay, look at me, I've got 80% win rate. Yeah, you might have 80% win rate over the past month, maybe 2 months, maybe quarter, maybe 6 months, but it will go down eventually. No one's holding 80% win rate for 3-4 years. I highly, highly doubt that. Of course, There could be some guy out there who's done it, but it's 1 in a million really. You're not holding an 80% win rate and above for a very long period of time. You might do it for a month, 2 months, a quarter, maybe 6 months. But yeah, anything more than 2-3 years is pretty much unheard of, to be honest. Even if you're an active day trader scalper, it will eventually come flat. Not flat, but flatter. 70% win rate, I think RR would be low, like 1 RR, 1.5. Yeah, exactly. If you're looking at 70% win rate, you're looking at you're just looking at winning more than you're losing, really. You're not looking to try and stretch your trades too far. You're looking just get into the trade, okay, bit of profit, I'm out, and that's gonna how you're gonna be a bit more consistent with your win rate. Because again, with 70% win rate, you're winning 70% of the time. That means as long as your wins are equal to your losses or maybe slightly above it, you're profitable. So your main focus is winning trades, really. Whereas people who are operating, probably 60, 50 and below, they're looking to try and bank more on their wins than their losses. And they're making sure that their profitability comes from them making more on their wins and cutting their losses earlier. But people looking at the 70% area, you're kind of just looking to win more than you lose, really. And that's how you retain your profitability, which I think is just a little bit, it's more difficult, I would say. I wouldn't say it's a wrong thing to do, because of course there are successful people who trade like that. But I would just say it's just a little more difficult because you're trying to, the way you stay profitable is by winning more of your trades, which is not really in your hands, at all. You just take a trade and the market will dictate if you win or lose. I think it's a lot easier to go for the risk reward route in terms of being okay if your win rate slips, 50, 40, even 30%. But knowing that if you're hitting 1 to 3s on average, you'll still be profitable when you do win, of course. I think that's a lot easier route to take, in my opinion, of course. But let me look at BTC Euro before I forget. It looked like pretty much Bitcoin against the dollar, pretty much. You said longs. Yeah, I mean, I might as well just look at Bitcoin, to be honest, because it's the exact same chart. I did say Bitcoin's looking good for a push back to the highs if we do take out this area here, because this looks to me like the last major obstacle in Bitcoin's path. This area here, this is where we saw a lot of momentum taking out these lows. If we do see price break through that, then I think it's just a matter of time before we do come back to the highs there for Bitcoin. So I wouldn't really look to long now if you're looking from a trading perspective. If you're looking to hold for the long run and you're okay to go through drawdown, then yeah, now is not a bad time to buy. But if you're looking at trading Bitcoin, then I wouldn't say is a good time to buy, because look where you're buying into, a lot of momentum from that area, and now price is just coming to that same level again. Even if we do expect price to break it, it just doesn't make sense looking to buy. So I'd rather wait for price to break through, then look to buy on the other side of it. Or if we do push down deeper, then there could be some nice buys to take back up later. So that's kind of how I look to take advantage of Bitcoin there. But I wouldn't say now is the best time to buy, even if we do expect price to break higher. Just doesn't make much sense. Really depends on what people are comfortable with. A high win rate with low risk rewards, psychologically much easier. True. Again, that's why a lot of people market that way as well. To a lot of beginning traders, a lot of marketing is, okay, look at my signals group. We have a 75% win rate. They don't really tell you about the risk reward or whatever. It's just 75% win rate, join the group. And, a lot of the emphasis is on the 75% win rate. And again, there's nothing wrong with that. I'm not saying that's a bad win rate. It's a very good win rate, of course. But it's on like a string. If you're gonna pull this way to get a good win rate, you're gonna sabotage the risk reward. And if you can have a big risk reward, you're gonna sabotage the win rate. So it goes hand in hand together. So there is no right or wrong way to go about it. But you just have to understand that if you're going to look to maximize something in terms of your win rate, you're going to sabotage your risk reward. And from my opinion, I think it's a bit harder to go that way because you're relying on that. You're winning a lot more of your trades than not. And there will be times in the market where your win rate does drop and you're just a little bit out of sync in the market and you take a few losses. And that's going to be a very tough patch for you because to even claw back out of that drawdown, your win rate has to go up again. You have to start winning trades again to start getting out of drawdown. Someone who has a quite big risk reward and a low win rate, it doesn't make too much difference if they lose some extra trades. If their win rate is 40% and their win rate drops like 30%, that means they take an extra few losses. It's not really a big deal because once they hit the bigger RR trades, they'll claw out that drawdown. Not quickly because it could take some time to actually find that big winning trade, but that one trade would just take them right out of drawdown, or at least most of the drawdown will be cancelled out. And I think it's a lot easier to go that route because even if you do incur a little bit more losses, you still have that kind of capacity to get right back at that drawdown. Whereas if you have a high win rate, you have to maintain that. And if it does drop, which naturally it will do, you're going to have to work hard to claw out that drawdown. Again, there's pros and cons to both ways. That's just my thinking of it. Not that you shouldn't go for a higher win rate and a low risk reward. It's just I think it's a little bit harder. But again, it's what you're comfortable with. If you want to have the higher win rate because it's mentally easier, but you will go through some bad times 100%, as you would do with a high risk reward and low win rate as well. It's just that with the person who goes into bad times with a high risk reward, the extra losses don't really make too much difference because they're already losing more trades anyway. 8% I think you would have a negative RR like 0.8, probably 0.8, 0.7. You probably would have a negative risk reward. Because again, you're just looking to win more than you lose. You're looking to win more than you lose. What's up, Ross? Welcome to the stream. Hope you're doing good. George, if you got psychology and patience for a low win rate with a high risk reward, it can be easy to manage because you have time to analyze the market and not have to make snap decisions. Yeah, exactly. I think it's just easier to go through that route, just in general. But I think it's easy to go through it once you've committed to it. But in the beginning, it looks easy to go through the route of a higher win rate because it's more attractive. Why wouldn't you want a higher win rate? Why wouldn't you want to win more of your trades, more of the time you're winning than less the time you're losing? It feels better to win a trade than take more losses, of course. So there's many surface level positive attributes to having a higher win rate and a lower risk reward. Take your profit quicker, you take your wins more often. But after trading for many years, I can kind of see, I'll probably sleep a lot better at night knowing that I can withstand that lower win rate, and knowing that I just need that 1 or 2 trades and I'm out of drawdown, or I'm really pushing my equity curve really far up, that if I do go through losing streak or I do incur a few losses, it's not making too much of a dent in my equity curve. So I'll sleep a lot better at night knowing that I just need those 1 or 2 trades to really just to drive my account in the right direction, whereas having to worry about winning the trade. And if I do take that loss, it kind of just takes me 2 steps back again. So that's kind of my 2 pence. But as I've said, there is no wrong or right way to trade. But you want to be aware of what the pros and cons of the way you're looking to trade, because there's pros and cons to the way I look to trade as well, and I'm aware of the cons and I've accepted the cons. But when you go the high win rate route, you're kind of not thinking too much about the cons too much because you're more focused on got a good win rate. But sooner or later it will come back to bite. Yeah, I did see that SEC did approve Bitcoin's ETFs there. Did see a big move up, but it hasn't really accounted to much, to be honest. Of course, Bitcoin is pretty bullish, but you can see didn't really do too much. Did see saw a few wicks down first, but we did see a nice move up. But overall price is still struggling at this 47 barrier here. But yeah, I think Bitcoin's likely to see a lot more upside. Again, not probably the best place to buy, but I do think Bitcoin is probably getting ready for a big move up. Morning, Gareth. Welcome to the stream. Just joined the stream. I was stopped out of UJ yesterday. What's your thoughts? Yeah, I'm still looking to short dollar yen as well. But yeah, it did break through that barrier of resistance there. So I need price to come right back down in the daily chart. See price close back below. Then I'll be interested to look into to short dollar yen again. I'm still looking for that move down. We've had this ascending move to the upside. We've broken out that channel. I'm looking at us holding this resistance for a move down. Yesterday we did close above it, so potentially I could be wrong. Maybe price is looking to do something like that. But I am still more inclined to look to short the pair because of the prices we're trading at. We've had a big move up. I'm looking for more counter trend moves, so I'm looking to short dollar yen as well. If we do come right back down, then I'll be looking to see if I can find some entries to get involved. But at the moment, we're trading a little bit above the level. So there's a chance, like I said, we can move up higher, but I'm not interested in the buys. So if dollar yen, I'm waiting to see if we can get back below, then I'll start looking for some entries again. But yeah, I'm still short bias. Again, as long as you manage your risk, losses, not really too important, really. Because they're inevitable. It's inevitable. But yeah, still bearish bias for myself. Nice. I'm long, looking for a breakout. Wish me luck. Okay, I wish you luck, FX Morpheus. Sanket, hi. I'm long on Aussie CAD. Please, can you break it down? Okay, we'll take a look. I'm looking for breakout in Aussie CAD. Okay. Anus, when you look at trading, there's endless ways to become profitable, and that's what causes the unprofitability of trades that get lost. Yeah, very, very true as well. Very, very true. It's kind of like lost in the analysis sort of thing, because there's so much freedom in the markets. You can look to buy here, sell there. Like I can just open up my MT4 and just sell dollar yen right now if I wanted to. You know, there's just so much freedom to operate, and I can make up a reason of why it's a good sell. You know, I can find a reason. I can draw something. I can cough up something. I can pull out an indicator somewhere that does tell me that this is a good price to sell, and it could make sense to sell it. And again, some person out there who could be a very profitable trader would deem that a good sell based on the set of rules they trade with. But for me, I'm like, okay, I'd rather price was to break back underneath before I start considering sell. But another trader is looking to sell that. So there's so many different ways to interpret the market. But one of the common traits you see with the very, very successful traders who've been trading for 20, 25 years is that they have their lane, they have their path, and they stay true to it. And they look to kind of learn and grow within that path, but they stay in that lane. And yeah, as you said, they get lost because they're trying to be in this lane, that lane, that lane, and this lane. But yeah, that definitely will punish you in the long run. You need to choose your lane, choose the strategies, choose the technicals, the fundamentals, whatever you're going to focus on, and just stay true to that. Because I can guarantee you, even if it's very, very simple, like just focus on purely double top patterns. If you just focus on double top patterns, take the trades, learn from your losses, learn from your wins, journal, you will improve and you'll become a very, very good double top trader. But of course, double tops are ridiculed in the social media part of the industry because it's too basics, too this, too that. And a lot of people have to learn complex things to trade, which a lot of people are just confused at learning. And again, there's many ways to do it, but if you just focus on a particular thing, study that, journal heavily. I think journal is the most crucial thing. you can do in trading, really, to be honest, actually. Whether you're going to do this strategy, that strategy, journaling is so important. I still journal, and I don't think I'll ever stop journaling, to be honest. So yeah, journal is so important. But yeah, stay true to one lane, and just stay consistent with that. But yeah, you're 100% right, Anus. What do you think about the FTMO banning US clients? Yeah, it's not the best, to be honest. As I was saying yesterday, I just bought an FTMO challenge. And now they're having some issues with US clients. So it's not looking good. The next challenge I buy, that firm's probably just going to go straight under, probably. But I don't know. I mean, the US has always been a sticky situation. They've always been very, very strict with their financial trading laws, and just financial companies in general, to be honest. They have very strict rules, a lot stricter than UK. UK, we can still trade CFDs. Of course, it's regulated. There's financial bodies set up to regulate that, but we can still trade CFDs. But in the US, it's illegal. And of course, a lot of the prop firms were letting US traders trade CFDs. But of course, I think FTMO have kind of realized that eventually, that they're going to get a slap in the wrist if they keep accommodating to US clients, because they're letting them trade something that's actually illegal in the States. So in terms of the US situation, I think it's more kind of just tailored to countries who ban CFD trading, quote unquote. In the UK, we can trade CFDs. However, I don't think that makes us in the clear, because there is regulation with the CFD trading in the UK. So UK financial bodies will probably look at FTMO and make sure that that they agree with the rules set by themselves. So I think eventually it probably will trickle to the UK, but I think it would still be allowed to operate as long as they're just agreeing to the rules the UK have. And same with Europe as well, same with Dubai, same with Australia as well. But I think in the long run it should be okay, because you're allowed to trade CFDs. There's just certain leverage you're only allowed to trade with, and of course the other regulations set in place as well. But America is completely illegal, so I think that was only a matter of time, really. But yeah, I mean, it's unfortunate, to be fair, but in America you're not allowed to trade CFDs for a while now. So it's kind of a weird situation, but I don't know. I mean, I think again with prop firm, you still just have to take it with a pinch of salt. If you're gonna cough up some money to take a challenge, be ready that you don't see that money again, not because you traded poorly, but because something else that is unforeseen happens. The prop firm goes under, they get banned from your country or whatever. So just be aware of that possibility happening. And if you're aware of that possibility happening, you're all good, really. I think just stay professional. Make sure you're not putting all your eggs in one basket. Use prop firms to the best of your ability. Take advantage of them. Help you grow your personal account a lot quicker than any other method, really, to be honest. So I say still take advantage of the prop firms, but take it with a pinch of salt. Be prepared for you to lose your money that you do invest in, and if you can accept those facts, I think you'll be good. But yeah, it's not great news. Gold I'll take a look at as well. Dollar yen looks like it's reacting with 146 pretty well. Yeah, it's holding, but I think dollar yen is just another pair waiting for CPI later today. As we've discussed, 1:30. I will be live again, by the way, with Trader Nick later today. So if you guys are free, feel free to hop on to his stream. I'll be live and we'll be covering the news and see what's happening. But I think dollar yen is another pair waiting for the news, for CPI. But yeah, it's holding 146, but that could change very, very quickly. And again, for me to look for sales, price has to be at least under 145 anyway. What's your outlook on gold? Okay, a couple people asking for gold. I will go take a look at gold. Good morning, Michael. Welcome to the stream. Pound AUD chasing my mental health. I've been holding for 4 days now. Yeah, you're in the same boat as me. Price has been up, down, and up again. So yeah, it hasn't been, and that's going to be the theme of the markets as well. So it's been difficult to find good opportunities, especially from a swing perspective as well. But again, these conditions come and go. They were there last year. I remember when the conditions were very, very clear, pristine, a lot of momentum. And I remember times last year when the conditions were very poor and very choppy. And you just have to kind of take the back seat a little bit. When the conditions become better, then you can put your foot in the gas a little bit, of course, responsibly. Not just, fling 20% of your account any which way. Anyway, so gold. Yeah, gold, don't really have too much to say on gold. It's at a big level resistance, as I've highlighted, so I'm not really looking to buy the market at these prices. The only thing I can do is look to sell, but at the moment we're testing some strong support here, and we had a pretty corrective move down. We haven't really set the world alight here, so we could see a move up there for gold. For me to be interested in some shorts and see price snap through this, and then I'll be interested in selling the pair on a retest of 2020 and probably get some nice sales back down to this area. That does look interesting. Other than that, I'm not looking to do anything. Buys, like I said, we're coming back into a big level here. I'm not looking to buy the market. If we do break the high here, then I'm expecting us to fill the wick. So I would only be looking for buys above this point, and then I'll be interested to long the pair. But other than that, this is kind of the only opportunities I'm seeing for gold. Anything in this area, I'm kind of staying away. Where was I? I agree, studying one particular set up works great. I also found that if you cut down the number of pairs you trade, will allow greater consistency over a period of time. Yeah, that can definitely help as well. Again, it's all about focus as well, not being distracted. If you know what you're looking for, it helps so much. And I think that's the most, not the most important thing, but a very, very important thing is just having absolute clarity, absolute focus in what you want to see and how you want to trade and how you're going to manage your trade and what your expectations are in the market. If there's some doubt in your trading, you don't know if your edge is really there, or you're not really sure what you're looking for, you have a rough idea what you're looking for, then that's just a recipe for disaster. You have to know with absolute clarity what you're looking for in the charts, because if you don't have absolute clarity and there's some area of doubt, some gray area which you're not sure about, then that's going to lead to mistakes, it's going to lead to FOMO, it's going to lead to revenge trading, it's going to lead to taking trades you shouldn't be in, it's going to lead you mismanaging trades that you should be managing appropriately according to your plan. So there has to be absolute clarity of what you're looking for, and yeah, most of the time less is more. Of course, I do trade a wide range of pairs, but I know what I'm looking for on each pair, and if it's not there, I'm chilling. FCA better than SEC, CFTC, 100%, Daniel. Thinking that the market should follow your own plan, and waiting for it to react like you owe something, it will punish you so hard in the long term. Of course, as I said, the bigger part of trading is knowing what the setup the best works for you, only taking that again and again. Yeah, that's what trading is. Trading is very, very simple if you kind of put it that way. It's finding something that works and then just trading that. Literally just trading that. Everything else ignore. And of course, you're looking to improve the thing that works, maybe take some things out that don't really work too well with that thing and then improve it. Of course, that's just a never-ending process, and that's where journaling comes in, really, because you would take a bunch of trades. I'm finding consistency here, I'm struggling over here, reflecting your journaling, and then you can eradicate things, add things, and grow from there. But yeah, it's simple from that aspect. Of course, trading is not simple, but when you understand it like that, you're just doing what works and focusing on that. And it's unique to everyone as well. Something that works for someone might not work so well for the other person, which is very important when you're learning from someone, is that you're taking in information on board, but you're also applying it, and then also learning from your application of it. I might say something to do this, you try it out, it's not working too well, you try something else that's working better, focus on that then. There's trading is a very, very personal endeavor. I think that we will be fine in the UK, as HMRC still hasn't got on top of self-employed people paying less tax and benefit fraud. So I think we'll go a long way with anything having prop firms. Plus, it's unlikely that they would have the time to investigate any prop firm outside the UK. True. I mean, yeah, I think that the UK do like following the US a little bit. So if the US start having a proper big crackdown, then maybe UK might get on its bike. But yeah, I mean, it's technically, it's not really anything illegal that's happening, really, at least in the UK anyway. So I probably wouldn't put it on the top of their watch list. Of course, I know nothing about their watch list as well. I'm just a simple retail trader. This is just my opinions out loud. But yeah, you do definitely have a point. But yeah, we shall see. And the FTM are only withdrawing from US because they probably don't want something to happen later down the line. I don't think any restriction has been placed on FTMO and they've had to withdraw from the US. I think FTMO is kind of just wanting to beat the bullet a little bit, maybe. So which is why they're also allowing current US account holders of challenge accounts or funding accounts to keep trading, which is still technically illegal in the US to trade CFDs, and which is probably why they're still allowing them to trade, because nothing really has happened yet. They're kind of just anticipating something to maybe happen, which is why they stopped accepting new clients from the US. So I don't think even the US are doing anything with FTMO. They're probably still occupied with my Forex funds, and that could take it could still take 2 years potentially to sort things out with my Forex funds. So yeah, it could take some time, and again, in that time, we have the opportunity to take advantage of the prop firms whilst they're there. The book One Good Trade, they emphasize the concept of taking one good trade after another trade, and a good trade doesn't mean a winning trade, but a trade which follows your plan well. Yeah, exactly. And that's another hard part as well, taking a good trade and then taking a loss in that position and having the confidence to come back again and take another good trade just after coming off of a loss, and you feel like, I have to change something because I lost. But it's a probability game. If you feel like you have to change something just because you lost the trade, then you're not looking at the market in terms of probabilities. If you take a loss, that's supposed to happen. If you take a win, that's supposed to happen as well. But if you look at yourself as, okay, I did something right because I won a trade, and I did something wrong because I lost, then you're too focused on the certainty of the markets, which will eat you up sooner or later. You have to view it as probabilities. Did you do something right in terms of following your plan, taking a good trade based on your rules and your criteria? Then if you did that, spot on. If you want to look to improve and better your system, then you got to look at multiple trades at one go, 10, 20, 30, 40 trades at one go, and see any common patterns between them. That has a bit more of a probabilistic mindset, because you can looking for reoccurring patterns. Okay, this keeps happening with my losers, let me start to eradicate this and focus on something else. That makes sense. If you look at an individual loser and say, okay, I should have done this, as long as you followed your plan. If you didn't follow your plan, then of course there's an elephant in the room there. But if you followed your plan and you took a loss, charge that to the game. If you try and investigate too much, you'll drive yourself crazy. Ross Miko, I admit GA had and has a sell setup, but something bothers me to not take the trade. was the area of interest 1.905 to 7-ish from 14th, 15th December. Still hope works for you all. Okay, I'll take a look at pound Aussie in a second. I was supposed to look at Aussie CAD, wasn't I? I'll go through Aussie CAD too. Profit trader, can we short AUD CAD on the hour time frame? I think someone else is looking to long the pair, but I'll go through that one. Gareth, did you pass your 100k funding challenge? No, I'm still in that challenge at the moment. Haven't taken a trade since the last episode, episode 5. So I'm still sitting in a little bit of profit in that trade, in that account. But yeah, still far, still a bit of distance away from passing. Okay. So yeah, with this position, the original level I was actually looking to short from was this low here, 1.891. So I was looking to short from this level here. It didn't really react too well. I was looking for momentum to kick in, but it never really changed anything. So I was keeping an eye on this level, but it never gave me a good entry signal. Then it broke higher. Then the next area I was looking to short from was this low and this area here. This low, there was a big wick, but I failed to see momentum shift. And then I got back into the, well, didn't get back into the trade, and I entered the trade at the retest of this level here. So this is kind of like the last area of 4H support, 4H resistance I would consider shorting. If it does break through this, then I'd wait for a bit more development to happen, as in, okay, or pushing up. I'll wait for us to start changing structure again, and then I'll look to short on a break and retest at some level at some point. But this is kind of like the last level, which I can see price kind of topping out at and moving to the downside. But yeah, it hasn't been moving great, to be honest. Going to trade on Monday, and there's been moving sideways for, well, till now. So yeah, the movement hasn't been great. I feel like price is waiting for CPI to do something, whether it's going to break up or break down. I think CPI is going to be the catalyst for that. But yeah, it has not been moving great since I entered the chart. But again, it's just one trade. If you focus too much on one trade, you'll drive yourself crazy. I'm looking at a big move back down to these lows here. And if I have to take a loss, get back into a trade, I'm perfectly fine with that. And again, I'm looking to scale in as well. So I may end up, if it does play out, I may end up taking 2, 3, 4 trades, including losses as well. So yeah, I'll see how price reacts with this level. And we'll see what CPI does, because I think CPI is going to be interesting. I'll take a look at Aussie CAD. Someone else did request that. Henry, 6% negative on my funded account. Any advice not to break the account? Lower your risk, Henry. Again, if it's the funded account, so it's not a challenge account, lower the risk. You've done all the hard work getting to, was it the 8%, 10%, and the 5% after. You've done all the hard work hitting those targets. Now's the time just to relax. The account is yours. The account is yours indefinitely until either the prop firm goes under or you hit the max drawdown limits. But the account is yours. So lower that risk. If you put yourself in the mindset of the prop firm, they're happy you're down 6%, and they want you to keep going more down and lose the account. You want to make it difficult for yourself to lose the challenge, which means lowering your risk to 0.5, 0.25, 0.1% of the account. Although it seems a little bit tedious and seems that it will take you forever to get back into profit again, but would you rather lose the account, not get your refund, and you have to pay for another challenge, have to make another 8%, another 5% after, just to get back in the same spot? Yeah, maybe some people would rather do that, but I'd rather get my money back. So yeah, lower your risk, and slow down as well. Slow down. The account is yours, as I said, indefinitely until the prop firm goes under or you hit the drawdown limit. So lower your risk. Focus on setups that work well. Doesn't mean that you'll just go through a nice winning streak, but focus on your best setups, the best trading opportunities. What are the conditions of those opportunities? Focus on those particular setups, and just take it slow. Take it slow. Trading is a game of probabilities. If you're down 60%, you're not the only person in the world who'd be down 6%. It's a very normal amount of drawdown to incur. So it's not like you've done something wrong. But in the case of trading on a funded account, you do want to be a bit more risk adverse. You do want to be a bit more conservative. A personal account, if you're down 6%, that's pretty standard. If you're down 6% on a funding account and you only got 4% left before they cut you off, you want to take things slow. So reduce the risk. You can increase the risk again once you find a bit more confidence, a bit more rhythm again. And again, I wouldn't increase it too much, maybe 1% max. But yeah, reduce to 0.5 or 0.25. Find the rhythm again. Find some confidence back again. You've got all the time in the world, and eventually you should climb out of drawdown if you do have a proven edge and a proven strategy. But make it hard for you to lose the challenge. Forget about the money. Forget about payouts and all of that. That will come. That will come when the time is right. But and just look at it as a challenge. You're down 6%. You're on the back foot. Climb out. Easier said than done, of course, but very, very doable. Just reduce the risk and gain some traction again. And even if you go deep into drawdown, don't worry about it as well. Okay, so Aussie CAD. Aussie CAD for me, this is hectic price action. Very, very choppy. I'm not seeing any good opportunities here off the bat. And I know this because I looked at it on the weekend and, I said I'm not going to be looking to trade this pair this week. And I'm still not interested. I need price either to break the lows here or break the highs for me to be interested. Anything in this area here is just messy. I can understand looking for longs, so we still kind of have an uptrend, but the uptrend's kind of showing signs of exhaustion. Failing to break the high is not a great sign. And I can understand looking to sell as well, because again, we're failing to break the highs, looking tired. But for me to be looking to sell Aussie CAD, I need something like this to happen. And then I'm looking to short. This to me looks like a really good opportunity, because at that point, you probably got a bit more of an established bearish trend. We've broken out the consolidation. We've got a nice level to retest. And we could probably see a nice move back down. Likewise, we can probably see a really good move up higher. If we see a lot of momentum breaking through, show us that the bullish trend's back alive again, then buys look really good up there as well. But in here, it's just very, very 50-50. I can't find clean, worthwhile opportunities in those conditions. Because it's just too difficult. There's no kind of real edge there. That's kind of like the 50%, and price is kind of just fluctuating between that and the high and the low. So if you're looking to trade Aussie CAD, if you're looking to buy, I'd wait for price to break through the high or break through the low. You'll find yourself a much, much better opportunity there. And of course, it might take some time, but there's no point of rushing into a trade just to lose it. So I'd wait for price to break the high, break the low, and then probably find some nice worthwhile opportunities after that. But current conditions are very, very poor. No problem, Henry. Happy to help. Making back 6% is better than making 30% off. Yeah, exactly. It's more effort to make. And like I said, you've already gone through a lot of hard work making that 13% and getting to that stage. So just take it slow, and the payouts will come. But if you try and force it, you're gonna bite yourself in the foot for that. Is that the right? Bite yourself in the foot? That doesn't sound right, but you know what I mean. Just lower the risk and forget about the lower the risk to a point where you're not really concerned if you do take a few more losses. Like if you're at 0.1%, if you lose five trades in a row, you lose an extra 0.5. You still got a lot of room to play with. So lower yourself right down. Focus on gaining confidence back, finding rhythm again, and then you can see where you can go from there. If you want to up the risk a little bit more, try and speed things up, that's fine. But if you're in drawdown, keep your head on your shoulders and yeah, stop the bleeding first, and then you can look to reverse things. But good luck with that, Henry. Good luck with that. But yeah, guys, we have reached the end of the stream. If you have found it useful, enjoyed it, please be sure to drop a like and subscribe. Really do help. It really does help out the channel. Of course, make sure you do hit the bell as well, so don't miss out any streams or uploads in the future. I do have a link to my Telegram channel in the description below. I share my trades there, updates, watch list, videos I create. So make sure you do check that out if you want to stay in the loop of things. Like I said, I will be live again later today with Trader Nick on his channel. So feel free to tune in. I'll post the link to that stream when it does go live, and I do join in the Telegram below. So stay tuned to that. But guys, have a fantastic rest of the week. As I said, we do have some news later, so do stay aware of that. Make sure you're prepared for it. But otherwise, have a fantastic day. Thanks so much, Anis, for moderating the stream. Appreciate it. But guys, have a fantastic day, and I'll catch you all in the next one.
What?